Welcome back. Markets this morning on the upswing, heading into the last trading day of the quarter. This morning and the month, the Dow futures are up 84 points. As you can see, S&P futures up 8.5, and the NASDAQ up 58 as we close the books on what is expected to be historically a bad quarter, but we know that it is among the worst. Global stocks poised to log their worst quarter since 2008 in the financial crisis as the coronavirus pandemic sends markets sliding this quarter. Joining us now right now is Mahoney Asset Management CEO Ken Mahoney. Ken, thanks so much for weighing in here. Do you think there's any more clarity here going into the second and third quarter for investors as they try to allocate money? We know that there was no clarity in the first quarter, so no surprise that we're seeing as weak a quarter as it has been.
Well, I guess the only clarity you could say is more weakening data, and that's what we're trying to figure out here between the stimulus versus the weakening data and which one's going to win. The Federal Reserve trying to put a little cushion here as well, but the uncertainties, I think, is going to continue. And again, it's hard to believe it's March 31st, Maria. It feels like it's September, October. You know, it's been a long month this quarter.
And look at what the St. Louis Federal Reserve is saying, issuing a stark warning on the U.S. economy. The Fed is predicting the unemployment rate could top 32%, with coronavirus job losses totaling 47 million. Ken, how does that play into your models in terms of markets and investing?
Well, right now we've been in this kind of snapback rally. Look, the rubber band stretched too far one way, come back another bit. You could call it mean reversion. In this, we are lightening up on stocks. You know, we actually, believe there is a two-tiered market here. So we don't like the S&P 500 because there you're going to get retailers, travel, you're going to get some areas, oil, just so out of favor. We rather, look, the leadership going into, before the coronavirus, was that of technology. And now one could say, coming out of this, with all the use of technology, from Zoom to video conferencing to cloud to everything else, I still think technology is going to be the leader coming out of this. And by the way, a lot of the larger companies like Apple, like Microsoft, have strong balance sheets. And, for once we're talking about balance sheets, but it's going to be really important to get through this year to have strong balance sheets. So, again, we're going to kind of tune this in. We're going to, again, right now we're trimming our positions, waiting for another whoosh down, and then we'll be picking through the rummage and looking at technology specifically and try to stay away from all the other areas.
Allie, what about that? How are you investing today, given the fact that Ken makes a great point? Some of these balance sheets are very strong, and yet they're throwing the baby out with the bathwater and selling everything in some corners of these sectors.
Yeah, a lot of that you see because at this point about 40% of buys and sells happen through ETFs. Some of those ETFs are going to be specific to for example, to what has just been said to technology, but a lot of them are really broad markets. So there is a lot of throwing out the baby in the bathwater. And so we still have a little bit of risk on in the U.S. They are exactly in the sectors and in the companies that have fortress balance sheets that will be the winners going forward, high dividend payers, consumer goods focused, and things that are focused on trends that we see in the future. All of these concepts about changing work from home, clean energy, age tech, I think is going to be a big beneficiary of what we're seeing now. But yeah, you have to stay strong. And even though the market is being indiscriminate about what it buys and what it sells, our clients and our portfolio managers need to be very, very specific.
So Ken, real quick, you said you were selling into some strength. Does that mean you're going to be selling going into the rest of the year here?
Well, again, we're just going to take it like, a really short time frame. Just kind of like a night you drive, you can see, headlights on, see 20 yards in front of you. That's how I want to keep it right now. Just go for singles, not try to be a hero here. Do some quick flips when we have these oversold, sell-offs, and then, buy some technology, sell into rallies, try to create some alpha there. But that's really the only way we're going to do it. Try to keep the, singles here.
Ken, thanks so much for weighing in this morning. Ken Mahoney, great to see you, sir.
Thank you.
We will see you soon. Coming up.